Semiconductor stock investors are salivating at the idea of how much increase in revenue the growing effectiveness of artificial intelligence can bring to the industry over the next decade. For that reason, I wanted to compare ASML and Lam Research, which provide tools for making semiconductors. Investors might be considering comparing these two to determine which one is the better semiconductor stock to buy. That's the question I'll answer in this video, which one I think is the better buy, comparing these two companies on revenue, profit margins, cash flow from operations, returns on invested capital. I'll also compare the valuations. I'll look at a forward price to earnings multiple, and I'll share with you my discounted cash flow valuation models for Lam Research and ASML. So let's dive right in. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The first metric I wanted to compare is revenue over the previous decade. And looking at this metric, you can see ASML increasing its advantage here against Lam Research. Starting in about 2018 is when this separation really started to accelerate. 28 billion in trailing 12-month revenue for ASML. Lam Research at about half the size at 15.6 billion. Looking ahead, ASML, some of its biggest customers, including TSMC, Taiwan Semiconductor Manufacturing, are likely to increase their orders. They're reaching their capacity, and ASML is just about the only place they can get that latest generation EUV technology. And so ASML, compared to Lam Research, boasts a stronger competitive advantage because its tool-making equipment is more exclusive compared to Lam Research. The next thing I wanted to compare these two on is operating profit margin, and these two are very similar in this metric. ASML with a slight advantage at 31% compared to 29% for Lam Research, and over the previous decade, they've both demonstrated improvements in this regard. Growing at larger scale, the companies are able to generate better profit margins, and that's been improving since 2015 when Lam Research had an operating profit margin of around 16% and ASML had a profit margin around 22%. Those have since improved to 29% and 31% respectively, with a slight advantage to ASML. We get a different story looking at the cash flow from operations to sales, where ASML has experienced a big dip here. Its cash flow from operations had soared to over 60% CFO to sales, that is, before declining here to 18.4%. One of the reasons for this development is that ASML is preparing for a big surge in sales in the upcoming years and quarters. And so it's buying materials, preparing inventory for sale. And so when a company does that, sometimes the cash flow from operations falls because it's cash going out, inventory coming in. Then when they make the sale, that trend reverses. That's then turned into inventory going out and cash coming in, which then creates that surge that you saw here in 2022. So that's the explanation of why ASML is experiencing a big up and down here in cash flow from operations to sales. Lam Research, less volatile in this metric, also demonstrating excellent improvement at 34% most recently, up from around 18% in 2015. The next metric I wanted to compare is return on invested capital. This measures how good the companies are at taking investor money and turning it into profits. Now you might say, well, these companies don't really take money from investors anymore. They generate their own cash flow, and so they use their own cash flow, not investor cash flow. That's where many investors make a slight error in their perception. If a business generates profit and they keep those profits, that's investor money, right? Because if you own a share of ASML or Lam Research stock, you're entitled to those profits. But if the company doesn't give you the dividend at 100% of the profits they generate, which neither Lam Research nor ASML do, they retain a significant percentage of those profits for reinvestment. And so that's the investor capital they continue to deploy into the business. Instead of giving you all of the profit they generate every year as a dividend or a buyback, they put some of that money back into the business for research and development, for growth projects. And so they're still using investor capital, even though they're not coming to investors and saying, can you give us more money? They're indirectly using investor capital by reinvesting the profits that the business generates. And these businesses generate healthy profits. So they are reinvesting billions of capital back into the business. All right, so now that we looked at the financial metrics performance wise, let's look at valuation. And let's start with the forward price to earnings. Judging by this metric, ASML is more expensive than Lam Research. It's trading at a forward price to earnings of 25 and a half compared to Lam Research, which is trading at a forward price to earnings of 19. But that's only one way to look at valuation. Another way I like to look at valuation is by doing the discounted cash flow model. And according to my DCF for ASML, the stock price is trading right about its intrinsic value per share. I have the intrinsic value per share calculated at $770, and I did this calculation on October 18th, 2024. The market price is at $769, so right about fair value here for ASML in its discounted cash flow valuation. Also, the forward price to earnings shows me that it's right about fair value as well. Neither too expensive nor cheap, right about fair value. Lam Research, meanwhile, my DCF suggested an intrinsic value of $50 per share, and the market price is $79 per share. So my DCF on Lam Research, which I did on January 2nd, 2025, suggests that it might be overvalued. So looking at the valuation of both Lam Research and ASML, looking at both the forward PE and the DCF, I come to the conclusion that ASML is a better value. And then compared with the financial performance metrics, which were close, but ASML had the advantage in those for the most part. And then finally, ASML, in my opinion, has a bigger moat around the business. In other words, a bigger competitive advantage because of how difficult it is for any business to go and buy something similar to ASML's EUV machines. It's such a component that is so rare and nobody else can produce that type of equipment. And so that gives ASML a bigger competitive advantage against Lam Research. So all things considered, if I was to choose the better semiconductor stock to buy today, I would choose ASML. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.